Okay, let's unpack this. Today, we are strapping in for a deep dive into the mind of one of Silicon Valley's most, well, enduring figures, Larry Ellison, the co-founder of Oracle.
Absolutely. A true titan. Known for the tech vision, sure, but also that huge personality, buying islands, the whole deal, and a famously aggressive way of doing business.
Exactly. And we're going to look at him through a really interesting lens today, maybe one that gives us the clearest view of how he operates outside the boardroom. Elite sailing.
Right. The sources we've looked at really paint this picture of a hyper-competitive spirit that honestly couldn't just be contained within Oracle. It spilled over.
He took that same intense, win-at-all-costs approach from building a software empire and applied it to this incredibly demanding, high-stakes sport.
A sport that demands, just staggering amounts of money and serious engineering chops.
So our mission today is to pull out some key insights from the sources about Ellison's leadership style, his tolerance for massive financial risk, and crucially, his absolute need for personal control.
And his America's Cup campaigns are just the perfect case study for this, aren't they? They forced him into these really public decisions about money, about team culture, and ultimately about what it takes to win.
Yeah, absolutely.
And it plugs into this bigger thing, this modern phenomenon of the super wealthy tech titan, the top 0.1%, how they concentrate not just capital, but ambition. They don't just bankroll things passively like a hobby. They dive in. They dominate them. They apply that same ruthless mindset they used to build, trillion-dollar companies to basically any competitive arena.
Whether it's market share or a yacht race.
Exactly. It tells you something profound about how this elite group sees competition itself. It's all a battleground. Conquest is the only thing that matters.
Okay, let's start right there with the money. The sheer, almost unbelievable scale of the financial commitment needed for elite sailing. It just sets it worlds apart from, say, owning a football team.
Oh, completely. The sources are really clear on this. A single America's Cup campaign. And remember, this takes years of planning and development before you even race.
Right.
That's going to run the owner somewhere between $50 million and $100 million.
50 to 100 million for one campaign cycle.
Yep, for one cycle. And that money, it's not like you're just buying a finished boat. It's funding a arms race, basically, an engineering arms race.
So it's less like buying a fancy car and more like funding the entire R&D division to invent a totally new kind of car.
That's a great way to put it, yeah. What does that money buy? It buys time, it buys intellectual property,
Right.
It buys sheer material advantage.
Okay.
That budget funds, completely custom technology development, years of complex computer modeling, computational fluid dynamics, hiring dozens of the absolute best naval architects, engineers, sailors from around the globe.
Right.
For Ellison's 2013 campaign, for instance, it fueled the development of those radical AC-72 catamarans, remember those? The giant carbon fiber beasts that literally flew on hydrofoils.
Oh, yeah. Those were incredible. Looked like something out of science fiction.
Totally. And developing those foils, the things that lifted the whole 7-ton boat out of the water. That took materials, science investment, and design cycles you'd normally only see in aerospace or defense projects.
Wow.
So it commits the team to this whole infrastructure that's kind of like a small, high-tech military operation, all focused on shaving milliseconds off of race time.
All for a boat race. It's
Yeah.
mind-boggling. And what do you get for pouring that kind of high-risk cash into it? According to the sources, it boils down to the one thing Ellison seemed to prize above almost anything else.
Control.
Exactly. Control.
That's the core motivation, right? It
Yeah.
wasn't just about the thrill of winning from the owner's box. It was this deep-seated need to be directly involved in making that win happen.
He had this line, didn't he? About football versus sailing.
Yeah, he reasoned that, look, he could buy the San Francisco 49ers, but they wouldn't let him play quarterback. He'd just be the owner, a figurehead.
Right. Watching from the sidelines.
Right. But in sailing, even this multi-million-dollar high-tech version of sailing, he could buy the team and hold the wheel. And the sources say he really meant it. He didn't just pop down occasionally.
No, it says he almost never passed of an opportunity to take the wheel.
Exactly. That demand for personal engagement, for ultimate control, even if it meant putting himself right in the thick of it, potentially in harm's way, on those crazy boats.
Right.
That drove everything.
And that drive, that need for control and commitment, it led to this huge public moment that really showed his priorities, sacrificing a massive corporate obligation for the immediate needs of the race.
Ah, the Oracle open world incident. Yeah.
Tell us about that. It's kind of staggering.
It really is. It shows just how different his priorities could be from a typical CEO. So Ellison was scheduled to give his second keynote address at Oracle Open World.
Which is Oracle's huge flagship annual conference, right?
Mm.
Global attention, customers, partners, press.
Exactly. The absolute centerpiece event. The moment the corporate world expects the big boss, the face of the company, to lay out the vision for the next year. Huge deal.
And instead,
He made the call. He decided to stay on the water for the race. He skipped his own keynote.
he just ditched his own company's biggest conference, arguably the most important corporate event on their calendar,
Yeah.
to stay on a boat.
Yep. That's the level of prioritization we're talking about. It seems almost defiant, doesn't it?
It does. What did the sources say about why, or the fallout?
Well, the implication is he knew it would be criticized, sacrificing that corporate visibility, shareholder attention, all of that. But for him, in that specific moment,
The race was more important.
the actual physical fight for victory in the America's Cup was more vital, more real. It required his presence more than giving a speech, however important that speech was symbolically.
Wow.
It showed where his immediate focus was, right there, on the water, in the tangible battle. His involvement wasn't something he could just delegate. He had to be there.
And that intensity was reflected in the competition itself. This wasn't just some gentlemanly regatta. It was described as, what was it? Match racing on steroids.
Huh. Yeah, and that description fits perfectly. It earned it. Partly because of the boats themselves, those AC-72s. Not only were they hydrofoiling, which was radically fast and dangerous,
Right.
but they were also incredibly sensitive. The races really came down to tactical brilliance and just raw nerve.
The sources mention race 10 specifically.
Yeah, race 10 had lead change after lead change. It wasn't just about sailing fast in a straight line. It was this intense back-and-forth dogfight. Margins measured in meters, sometimes inches.
Like Ellison's team, USA 17, apparently got within about a meter of breaking an overlap with the New Zealand team at a critical point.
Exactly. That kind of aggression was just baked into the competition by that point.
And you also have this whole layer of, well, almost political tension, right? It wasn't just Team Ellison versus Team New Zealand.
No, not at all. You had the team representing the Golden Gate Yacht Club, which, by the way, was apparently once near bankrupt before Ellison got involved, versus the Royal New Zealand Yacht Squadron. And the Kiwi team often felt like it carried the hopes of an entire nation. So that dynamic really raised the stakes. It wasn't just a rich guy's hobby. It became this proxy battle for national pride, for technological bragging rights.
And then there were the cutthroat tactics off the water, the cheating penalty.
Ah, yes. That's crucial because it shows the extreme lengths teams would go to, and it defined the narrative of that particular cup. Ellison's team, Team USA, they actually won 9 races on the water by the end, 9 victories.
But that's not how the scoreboard read.
Nope. Because of this infamous 2-point penalty for cheating, it related to some illegal modifications they'd made to smaller boats used in earlier preliminary races.
2 points. That sounds like a lot in sailing.
It's huge. Losing 2 points like that before you even account for race losses basically forced them to win 2 extra races just to get back to even. It was a massive handicap.
So it's a literal example of the rules being pushed, broken, and then having real consequences.
Precisely. That penalty just highlighted this whole atmosphere of intense legal maneuvering, aggressive tactics, finding every loophole. It was all part of winning at that level. The sources note that penalty pushed the Americans towards what looked like it could be the greatest collapse in sports history.
They were down badly at one point, weren't they?
Oh, yeah. Down 8-1. They had to win 8 straight races, which sounded completely impossible just to overcome the performance slump and that penalty deficit.
Incredible.
It really shows that in Ellison's world, whether it's running Oracle or racing yachts, even the rules are kind of fluid, subject to aggressive interpretation, and the only thing that really validates everything is the ultimate win.
Okay, so that environment, the $100 million stakes, the national pride, the cheating penalties, the pressure, it obviously demanded a certain kind of leadership.
Mm-hmm. A specific and often, pretty brutal management style.
And Ellison brought that same Oracle ruthlessness to the sailing team. There's a really powerful example in the sources about him enforcing discipline, even when it directly hurt their chances of winning in the short term.
Yes, this anecdote, I think, gives us maybe the clearest insight into Ellison's non-negotiable standards and maybe his longer-term thinking. The team manager, a guy named Ellison,
Okay.
He had the specific agreement with their best sailor, a guy named Chris. The deal was, if Chris verbally abused the team, his subordinates, lost his temper like that,
He was out.
he'd be gone. Simple as that. It was like a preemptive strike, acknowledging that sometimes your star player comes with a difficult ego.
And predictably, under all that pressure.
Chris lost it again on the water, just unloaded on the team. And Erkelins knew, okay, this is the moment. I have to stick to the agreement, even though the team was in a really dire situation in the races at that point.
So he calls Ellison. That's thousands of miles away, right? Lays it out. We're down. We desperately need this guy's skill. But he broke the rule. The cultural rule we agreed on.
Right. And you'd think any rational owner in that spot facing massive potential losses would say, look, just patch it up. We need him now. We'll deal with it later.
Hold on to your best asset right before the crucial moment. Makes sense. But Ellison didn't do that.
No. And this is what's fascinating. It was this moment of real calculation weighing the immediate tactical need against the sort of cultural integrity of the team. Ellison didn't just jump to keep his star sailor.
What did he do?
The sources say he paused. There was this silence on the phone, described as lasting about a minute. You can almost picture him weighing it up. Immediate win versus long-term principle.
A long minute, I bet.
Yeah. And then he just gave the command, clear and decisive. Okay, do what you have to do.
Wow. Just like that. He signed off on firing his best sailor, his biggest competitive edge, right when they needed him most.
He did. He accepted the loss to enforce the standard.
That says a lot. What does that tell us about his leadership philosophy?
Well, it suggests his view of ultimate success goes beyond just having the best talent on the field at any given moment. It suggests the culture, the discipline, respecting the rules he set that had to be paramount, especially when the pressure was highest.
So he was willing to sacrifice potentially millions and the immediate chance of winning the cup just to make sure his authority and the team's discipline were absolute.
It seems that way. It showed he saw himself not just as the guy writing the checks, but as the ultimate commander, capable of making these incredibly tough, even painful strategic calls for what he saw as the long-term health of the organization he'd built.
That kind of demanding, sometimes abrasive style. It feels like we hear echoes of that constantly in the stories of Silicon Valley's biggest legends, doesn't it?
Oh, absolutely. It seems to be almost part of the operating system for many of those who achieve that kind of impossible scale. There's this recurring link between massive success and incredibly high pressure, often confrontational leadership.
You can draw lines, right?
You can draw a pretty direct philosophical line from Ellison's approach to other titans of that era. I mean, look at Steve Jobs.
The classic example.
Known for his, let's be frank, obnoxious and rough management style. The sources are clear. Yeah, egos got bruised creating the Macintosh, maybe more than bruised. But the consensus was neither the people before him nor the people after him could have pulled off that specific, impossible creation in the way he did.
He had the reality distortion field.
Exactly. His famous reality distortion field. And that term gets thrown around a lot, maybe sometimes lightly.
Yeah, what did it actually mean in practice, according to the sources? How did it function as a management tool?
Its function was essentially to convince people, talented engineers, designers, that an impossible goal, an impossible deadline was actually achievable. Jobs used this intense charisma, this sheer force of will, to bend reality, or at least perceptions of reality, to match his ambition.
Forcing these incredibly tight schedules and demanding results that seemed impossible.
Right. It was a leadership tool, but one that relied on constant pressure, constant confrontation, and just refusing to accept limitations. And then, when something like the Macintosh did succeed under those conditions, it justifies the meat. Retroactively, yes, it creates this self-fulfilling prophecy. See? Only my brutal methods could achieve the impossible. Therefore, the brutal methods are necessary.
And Bill Gates, there's a parallel there too, right? Though maybe framed slightly differently.
Yeah, with Gates, the term used was high bandwidth communication. Sounds efficient, doesn't it? Very technical.
Sounds positive almost.
But the sources explicitly state that in practice, it often meant emotional tirades and verbal abuse, particularly when discussing work he felt wasn't up to scratch.
So high bandwidth was code for yelling.
Pretty much. Gates himself kind of dismissed it, saying he was just trying to get a point across efficiently, using the fastest way to transmit complex feedback or correct course.
But the effect on people.
Well, we know managers working on crucial projects, like Windows, they faced more of these tantrums than anyone else. The high bandwidth environment essentially meant the person at the top knew best, and confrontation, verbal aggression, shouting, slamming doors was seen as the quickest, most efficient path to getting things right.
It turns the workplace into a pressure cooker.
Exactly. A crucible. Constantly demanding perfection, often through sheer force of personality.
And this intensity, this demanding style, it seems directly linked to an appetite for huge risk too, the bet the company mindset.
Yes. For these individuals deploying massive amounts of capital, taking enormous financial risks, it isn't just an option they consider. It's often seen as a necessary step, almost a moral imperative to achieve revolutionary success.
They don't see limits the same way.
Exactly. Constraints, whether they're financial, operational, maybe even regulatory, they're viewed as obstacles to be smashed through, not boundaries to be respected.
Like Steve Jobs again.
Yeah, Steve Jobs apparently frequently called crucial product decisions a bet the company moment. Think about the first iPhone betting everything on that expensive, unproven multi-touch interface.
Right, that was a huge gamble at the time.
A massive gamble. And calling it bet the company, that wasn't just marketing spin. It reflected a genuine embrace of extreme risk as the only way to get extreme rewards and truly change the game.
And Elon Musk seems to take that philosophy of risk even further, framing it almost in, like, civilizational terms.
He does. When processing a setback, like a rocket failure, he connected that need for risk-taking to the fate of humanity itself. He said something like, "This is how civilizations decline. They quit taking risks.
Wow.
And when they quit taking risks, their arteries harden." I mean, that's a profound philosophical justification for pushing the envelope, isn't it?
It really is. It frames not taking maximum risk as a kind of moral failure.
Exactly. For this specific class of entrepreneur, avoiding the big gamble isn't just bad business. It's seen as contributing to stagnation, to decline. So when you see Ellison staking $100 million on a boat race and then being willing to fire his best sailor on principle,
It fits that pattern.
it's entirely consistent with this underlying belief system.
Right.
Real success, the kind that matters, is only found way beyond conventional limits and acceptable risks.
Okay, so let's broaden out from Ellison's personal ambition and leadership style to the bigger picture. The landscape that even makes a $100 million sailing campaign feasible, we have to talk about capital.
Yes, the sheer amount of wealth. The sources really dig into the economic ecosystem that allows for this kind of immense, almost casual-seeming deployment of money for personal projects.
Crucial context, right? It's the enabler for all this.
Absolutely. Because we're living in what many call a second Gilded Age. The concentration of wealth is extreme. The numbers are just, well, staggering.
Like what?
In wealthy countries, take Europe, for example, the upper decile, the top 10%, owns something like 60% of all the wealth.
60% for the top 10th. Wow.
But the really dramatic shift, the sources argue, is at the very, very top, the top 0.1%, that tiny fraction. That's the threshold where oligarchs dominate the landscape.
Oligarchs. Strong word.
It is. But it refers to individuals with such vast and often very liquid capital that their spending patterns just don't follow normal economic logic anymore.
And this isn't just static piles of money, right?
Right.
The sources say capital itself is flourishing.
Yes, that's a key point. There's been this fundamental shift in the financial architecture. We've seen the total value of capital assets, investments, property, IP in places like Britain and France return to levels not seen since before World War I.
Representing, what, 5 or 6 years of the entire country's income?
Exactly, 5 or 6 years of national income tied up in existing capital stock.
What does that mean in practical terms? For someone like Ellison or just for the economy?
It signals a return towards what economists like Thomas Piketty call a patrimonial society. Basically, it means wealth derived from owning capital. Just having assets that generate returns is growing much faster than wealth derived from labor, from wages.
So money makes money faster than working makes money.
In essence, yes. And that dynamic heavily favors those who already own significant capital. Like Ellison, whose fortune is tied to Oracle stock, a massive, scalable software asset. His capital generates wealth so rapidly.
That funding a $100 million sailing campaign becomes manageable?
Financially, it becomes almost equivalent to, say, a successful upper-middle manager buying a nice new car. The scale of liquidity available to that top 0.1% is just on a different planet.
And where is this modern, ultra-liquid wealth being generated? It's not just the old Wall Street banks anymore, is it? They've become more regulated since the 2008 crisis.
That's right. The game has shifted. While traditional banks are still huge, the real engine room for generating this kind of hyperliquid wealth, the place where the trading action has moved, is into a newer, much more opaque part of the financial system.
Which is?
High-frequency trading firms, HFT, places like Jane Street, Virtue Financial, Citadel Securities. These firms are shrouded in secrecy and operate on principles most people don't understand.
Right, HFT. We hear that term, but break it down for us. How do they actually operate, and why do they make so much more money, orders of magnitude more, than traditional banking roles?
Okay, so HFT firms basically live on speed and algorithms. Their entire model is about exploiting tiny, fleeting price differences in markets. It's called latency arbitrage.
Latency meaning delay.
Exactly. They invest astronomical sums in building proprietary algorithms and incredibly fast infrastructure. We're talking about placing their computer servers physically inside or right next to the stock exchange data centers, just to shave microseconds off the time it takes to get data and execute a trade.
Microseconds.
Yes, millionths of a second. These tiny time advantages allow them to see and react to price discrepancies that might only exist for the blink of an eye, discrepancies invisible to slower traders. They make a tiny profit on each trade, maybe fractions of a cent.
But they do billions of trades.
Billions. Across global markets every single day with near-perfect algorithmic reliability. So those tiny profits accumulate into absolutely astronomical sums. And because it's so complex and proprietary, the whole operation is largely shielded from public view and often from heavy regulation.
That explains the immense, instantly available cash these founders seem to have. There's that example with the founder of Virtue Financial.
Vinny Vitola, yes, a perfect illustration. He just went out and spent $250 million to buy the Florida Panthers NHL team.
Just like that, $250 million.
Yeah. That purchase isn't just about owning a hockey team. It's a tangible symbol of the sheer scale of liquid wealth generated by this new, often hidden financial architecture. Just like Ellison spending on the America's Cup, it shows this ability to deploy staggering sums on personal ambitions, confirming the power of this new financial class. The money is just there, ready to be spent.
And this extreme concentration of capital generated in these new ways feeds directly into this idea of winner-take-all economics, right?
Yeah.
Which technology itself seems to be amplifying. One source even called it the AI inequality machine.
Exactly. This is the structural underpinning that connects the success of companies like Oracle back to the personal fortunes of people like Ellison. There are academic studies looking at publicly traded companies.
What do they show?
They show this massive decoupling between how well the company does and how much the average worker benefits versus how much the person at the very top benefits. Look at the numbers. If a firm's value goes up by 10%, that translates, on average, to about a 3% increase in the CEO's pay. A direct, significant link. Wealth accelerates rapidly for the leader.
The 3% for the CEO. And for the average worker in that same company.
That same 10% increase in firm value, it's associated with only a 0.2% increase in average workers' pay.
0.2%. That's tiny. It barely registers.
It barely registers. That's why it's called a winner-take-all model. The overwhelming majority of the gains from growth, from success, are captured right at the very top.
And why is this gap seemingly getting wider, especially in tech and finance, the sectors where people like Ellison made their fortunes?
Well, it's partly due to the nature of the business itself. The most successful modern companies, software, data, AI, they have this incredible scalability. Oracle sells one database license or a million licenses.
The cost of making the next copy is almost nothing.
Near zero marginal cost. This ability to replicate success globally, instantly, without proportionally increasing costs, it generates astronomical profits for the owners, the controlling interests. The technology itself inherently rewards scale, rewards market dominance, rewards monopolies even.
So the tech reinforces the winner-take-all dynamic.
It absolutely exacerbates it, and that feeds right back into the immense personal capital available to the titans at the top, like Ellison, which then allows them to fund their next huge ambition, whether it's corporate or personal, like a $100 million boat race, without any real practical financial limit.
Okay, this has been a really fascinating look at Larry Ellison's ambition, using that America's Cup campaign as a kind of mirror for modern, hyper-competitive capitalism.
Yeah, we saw how his massive investment, that $100 million, was driven fundamentally by this need for personal control, wanting to be the one actually holding the wheel.
And that demand for control led to some ruthless decisions, like firing his best sailor right when he needed him, prioritizing his cultural standard over the immediate win.
Which connects, as we discussed, to those broader patterns we see with other tech giants like Jobs and Gates, that intense, demanding, high-risk, bet-the-company approach, where reality itself seems negotiable.
And we placed all that within the bigger picture of this financial landscape, where the top 1.1% command incredible wealth, partly thanks to new things like high-frequency trading.
An environment that fuels winner-take-all economics, making Ellison's incredibly expensive sailing hobby almost a perfect little microcosm of this entire system.
So let's leave our listeners with a final thought to chew on.
Okay. Considering that the success of these modern titans, like Ellison, often seems tied to their philosophical refusal to accept limits, pushing financial boundaries, behavioral norms, even rules, like winning races despite cheating penalties.
Right.
When we look at that immense scale of ambition and capital at the very top, is it possible that the real secret weapon of this new global elite isn't just brains or timing, but simply the inability or maybe the outright refusal to acknowledge any reasonable limit? Financially, professionally, behaviorally, is that the key?